let's get back to the global markets in the picture. Robert Sockin, global economist at Citi, is now joining us on the show. Robert, thank you very much for joining in. This is Reema here. So two big announcements that we're tracking here. One is Scott Bessent's appointment as the U.S. Treasury Secretary. And two, Trump posting on the Truth Social platform pledging tariffs on China, Mexico and Canada. Weigh in on what these two mean for the global markets.
Absolutely. And thank you both all so much for having me. I think on both parts, I'll start with the first one, which, markets have been very excited about because Bessent is seen talking about more fiscal control. So bringing the deficits, which are forecast to be 6% of GDP over the next decade, down to something like 3% over the next several years, targeting 3% U.S. growth, also larger oil supply, and markets have taken that very positively. I think it's a very good choice and also is going to be a very good voice within the administration on economic policy. But it's important to also note that while the Treasury is the most senior economic official, there are many other voices that are going to be at the table, including Trump himself. And there's going to be a very complex process of debating what type of policies. What markets are really trying to figure out is what tariffs are eventually going to look like. And there are different voices within Trump's inner circle that feel more or less strongly about the type of tariffs and how extensive of tariffs he should do. So it's, I think, a very good choice. I think positive, but only going to be one voice of many. And we have to see how the rest of the economic choices evolve in terms of staffing. On the second one with the tweet, I think to me it was a bit of a surprise. I fully expected and have been expecting that Trump would aim to negotiate with trading partners and use tariffs more as a negotiation tool. Even with China, I think there is scope to negotiate. Now, we've seen there's a big difference between the rhetoric that Trump says and what ultimately ends up being pursued as policy. We saw that in his first term. So I'm still not convinced from this messaging that we are necessarily going to get tariffs on day one. It may very well be a negotiation tool that he'll use to kind of spark debate with trading partners as he heads into office. So it's a worrying announcement, but I think it's too soon to say if it's actually going to end up being what we see when Trump enters office on day one.
Robert, hi, great to have you on the show, and that makes perfect sense, right? Because with the new administration coming, we really need to figure out who finally does what. I mean, markets are moving on expectations, but whether it's the Treasury Secretary, whether he manages to prevail or not, and whether Mr. Donald Trump indeed goes ahead with severe tariff hikes, we'll need to see. But in the meantime, the equity markets have been having a fantastic run, right? The belief is that it's all about making America great again. And we're seeing that play out. A lot of the more economy and consumer-facing, local-facing stocks, they've started doing really well. Do you think Wall Street will continue moving higher towards the end of the year? And where does that leave emerging markets? Because from markets like India, I mean, there's been an exodus as money moves back home.
Yeah, it's a complex picture. And to your point, equities have been performing very well in the U.S. Part of that, as you said, is because we seem to be having a very strong, resilient economic cycle here, including a very strong, resilient U.S. consumer that just keeps on spending. And we've seen a broadening out of that spending. It used to be that consumers in the U.S. were just increasing their spending on services. We're starting to see that broaden out into goods as well. And our equity strategists really like growth in cyclicals in this environment. Now, our equity strategist is looking for a bit of a pullback from current levels, but that's not baked in the cards. Their bull case for the end of this year is 6,100. So you still could have some more room to run, depending on how the economic picture evolves, and of course, how the policy picture ultimately evolves. If we end up getting extensive tariffs, in the past, that has been a headwind for many companies and their equity prices. So it's really a complex picture of how well the U.S. economy holds up and how well the policy landscape evolves. But I do think there is scope for it to go up from here, as I mentioned with our equity strategist bull case. Now for India, it's a complex picture, as you said, but at the same time, I do think over the medium term, India is very well positioned, especially compared to other emerging markets. We've had very strong growth this year, and we're forecasting another very solid performance out of India's economy next year. So I think while there's been some challenges, I think India's economy is very well positioned over the medium term, and over that period, it should attract increased investor flows.
Take that point, Robert. Thank you so much for joining in. We're back to the days where, we're watching Twitter before ticker once again as Donald Trump, takes charge once again. We'll keep an eye out on all the complexities of tariffs and the impact on U.S. stock markets. But the good part is that India, the outlook for the near term is fairly solid, though how much of that is in the price is something that we'll have to, keep an eye out on over the next couple of years. Thank you so much for joining in.